PayPal stock is crazy at the moment, down a few percent after Q1 earnings. But this could prove to be an inflection point for PayPal. This is a must watch video for PayPal investors. While retail are getting scared, major institutions are taking advantage on the cheap. Before we get into it, if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 300 likes on this video. Help me hit that goal. Subscribe to the channel if you're new, hit the bell notification so you don't miss out on any new content. I'm not a financial advisor, this is not financial advice, so always do your own due diligence. Now there's a lot to discuss, so let's get straight into it. First of all, what exactly is PayPal? Well, PayPal is a fintech company operating in online business payment system in the majority of countries around the world. Their online payment system enables individuals and businesses to send and receive money securely either by phone, app, or website. When linked with a bank account, debit card, or credit card, PayPal serves as the middleman to keep the bank data secure. PayPal has over 300 million users globally with 29 million merchant accounts and has been established for decades. So let's be honest, everybody has heard of PayPal and everybody knows what PayPal is. This is a household name for the better part of the past 2 decades as one of the most established online payment processors in the world. Over the years, the PayPal business model has become stale and the company had lost its position as the most dominant online payments provider. But in the past year, the company has acted, with a new CEO installed who has taken action to build a new world-class management team that are looking to turn this company around and re-establish themselves as the market leader, with the goal of positioning PayPal for long-term success. PayPal are focused on driving profitable growth, and as we can see here, in the past 3 quarters, the company has increased revenue by 9% year over year, while also increasing operating margins by more than 18% year over year. And this has led to earnings of $1.08 for Q1 24, which is a huge increase of 27%. Now, this is far more impressive than a lot of people will give the company credit for. It's one thing for a company to increase revenue by 20%. This can be done in many ways, but it doesn't necessarily mean that a company will become any more profitable. In fact, for a lot of growth companies, for example, increasing their revenue comes at a substantial cost and margins deteriorate. But PayPal is improving margins and increasing their earnings per share, which is a sure sign that management are going in the right direction. And this is the reason why PayPal stock has increased about 50% since its 52-week low back in October. PayPal now has 427 million active users, which is huge. Now, this is a 1% year over year decline in active accounts, but this shouldn't be underestimated. This is still a huge number. 427 million accounts. With these types of numbers, we are never going to see the kind of increase in users that a growth company would get. But what is important here is the other details. Like, look at the rest of this data. The number of payment transactions has increased 11% year over year, and transactions per active account has increased by 13%. So although PayPal have not significantly grown their user base, they have in fact been using PayPal more often. TPV has increased 14% year over year, and total revenue of 7.7 billion is an increase of 9% over the previous year, so everything here is good. But most importantly, free cash flow has increased 76% year over year, up to 1.8 billion, and in Q1, share repurchases returned 1.5 billion in capital to stockholders. On a trailing 12-month basis, share repurchases of 5.1 billion reduced the weighted average shares by 5%, and as of Q1, cash and cash equivalents and investments totaled 17.7 billion and debt totaled 11 billion. But despite all the positives, PayPal did fail to meet analyst expectations for Q1. Although PayPal did beat on revenue when they reported 7.7 billion, they did fail on earnings per share. Analysts had been expecting $1.22, but PayPal reported $1.08. This in part has led to the share price dropping. The other part is the Q2 guidance. For second quarter 2024, PayPal expects revenues to grow 6.5% on a spot rate basis and 7% on the currency neutral basis from a year ago's quarter. Non-GAAP earnings per share are expected to rise in the low double-digit percentage on a year-over-year basis, and for 2024, PayPal anticipates non-GAAP EPS to rise in the mid-high single-digit growth. So PayPal have guided on the low end for 2024. This is a similar tactic to the ones we've seen at companies like SoFi. They estimate low, and then they beat the estimates on every quarter. PayPal have guided for just 7% Q2 revenue growth, which would be lower than any other recent quarter and would actually be very disappointing. So I expect them to quite easily beat this when they release their earnings, but a lot can happen between now and July. But now, something that I did find very interesting after PayPal's earnings report, after this was considered disappointing by a lot of retail investors, after they failed to beat the EPS estimate and the stock price dropped over 7%, every analyst covering PayPal instantly increased their targets after earnings. Now, there has been no major increases, like none of the analysts have doubled the price target or anything like that, but all the analysts have boosted their targets by a few dollars at least. Let me know what you think in the comments below. All these analysts boosting their price targets, yet at the same time the stock goes down. Are they manipulating PayPal's stock price? I want to know your opinion on this. So what will PayPal stock be worth in 2025? Shares of PayPal are historically cheap at only 2.5 times sales. If PayPal's active user base stabilizes, that valuation multiple could easily double. It wouldn't take much for PayPal's valuation to reach $140 billion by the end of 2025. And as it says here, patient investors could eventually win big. And this does remind me of that old Warren Buffett saying that the stock market is a device for transferring money from the impatient to the patient. Now, PayPal is in no way doing badly, and it is very conceivable that PayPal could be worth $140 billion in 2025. After all, its payment platform has more than 400 million accounts. That's bigger than the population of the US, but PayPal's user base was even larger in 2022 than it is today. PayPal has still been able to boost revenue nearly every quarter, but the market is worried that its biggest days are behind it. These concerns have sent the stock price valuation sharply lower. PayPal has still been able to boost revenue nearly every quarter, but the market is worried that its biggest days of growth are behind it. These concerns have sent the stock valuation sharply lower. In 2021, the stock was valued at 15 times sales, and the growth rate was about 10%. Today, shares are priced at just 2.5 times sales. Now, if PayPal can consistently get growth rates back to 10% again, there's reason to believe the valuation would pick back up to somewhere between 4 and 5 times sales. There could even be more upside given to shares given that the company is doing the share buybacks. These buybacks would create billions in shareholder value if growth rates improve and the valuation multiple follows suit. So I guess the most important thing is to get the growth rate back above 10% again, and to do this the company needs to do two things: stabilize account user numbers and increase activity amongst existing users, which we have already seen. PayPal are doing very well. Although the total active accounts is still falling, it fell by only 1% last quarter. PayPal know that if they stabilize this, total revenue growth could reach double digits once again. They have unveiled new initiatives aimed at stabilizing its user base, such as the Fastlane feature. PayPal know that accelerating checkout times is a major metric for digital merchants, and if PayPal can help merchants improve this metric, its service could see an uptick in adoption on the merchant side and thus perhaps an uptick in adoption on the user side. It wouldn't take much to get revenue growth rates back to 10%. If the company can achieve this for several quarters, then expect the valuation multiple to pick up sharply. Based on the stock's 2022 price to sales multiple, the company could easily be valued at $140 billion or more. So a question now that I have for you is, which stock is the better investment for the next 5 years? Do you prefer PayPal or SoFi or even Block? Leave a comment below. As usual, I really want to hear your thoughts on what you believe is a great investment. And if you have any suggestions of stocks that I should take a look at, then comment below. I'm currently looking into 2 companies that were suggested in the comments over the past week that I will be covering on the channel in the coming days. Remember that I'm not a financial advisor, so always do your own due diligence. But if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll